Travel-related stocks lifting Wall Street higher Monday, with the S&P 500 and the Dow trading at record levels. Well, let's get inside the markets with Adam Coons. He's a portfolio manager at Winthrop Capital Management. Welcome, Adam.
Hi.
Great to have you with us on this Monday. Now, airlines are the top movers so far today, as several airlines pointed to signs of recovery with rising bookings. We've got them now trading at several of those issues at pre-pandemic levels. American stock is up nearly 60% year to date. United up 28%. Have airlines gotten ahead of themselves?
Yeah, I think a little bit, and the reason for that is there's a lot of exuberance around the fact that things are reopening. We've got a vaccine that people are adopting, so there's this sense that we're going to go back to normal, and everything is going to be the way it was, 2 years ago. The theme that I'm hitting on, though, with airlines to be cautious of is that the business traveler has changed, and that piece is not coming back in the same way it did before. And what I mean by that is that while the everyday consumer who takes a vacation a couple of times a year, they're very price sensitive, right? They shop around, they find the right dates that have the cheapest airfare. So while airlines like that customer, they prefer the business traveler of 2018 who, if they needed to go to New York tomorrow, they didn't care if it was $500 or $2,000. And so they were less price sensitive. And airlines really, really liked building, loyalty with those type of travelers because they could get a higher premium for them. Well, now that, calls like this have become more accepted, more adopted, and in some ways preferred, you're going to see a big shift in how the business traveler, does meetings. And so they might not have to fly as much. And so that is going to be a hit for airlines for the long term.
So should some investors take profits on airline stocks right now or hold or what?
Yeah, I mean, I would definitely be looking at taking profits where we're at right now. What I would say is if you want to be in the airline space, the name we like is Southwest, because converse to kind of what I just said is, they've been really levered to the consumer traveler, the vacation traveler. They're mostly domestic. So, they're well positioned for this recovery more so than the other airlines.
And Adam, we've got yields dipping a bit today, but still peaking above 1.6%. What do you make of the markets in terms of returns? How much more can we get this year?
Well, I mean, interest rates really flow with growth and inflation. And so the reason their rates have been up over the last couple of weeks is that theme that we're going to get higher growth. We are going to get higher inflation. And while we agree with that in the short term, we think that this stimulus and the vaccine, the combination of those two hitting at the same time, is going to spark economic growth. Long term, we think that just the structural issues, demographic issues are just going to continue to drive interest rates down. But in the near term, I think, we're going to see interest rates kind of continue to go up a bit, which then will play into, the value versus growth story. You'll continue to see a slight rotation out of growth names and into value names given interest rates are higher.
So as portfolio manager, what are you doing with your portfolio? What are you selling? What are you buying?
So one of the big things we've been doing this year is moving into more equal weighted products. So in our asset allocation models, we are buying the equal weighted consumer discretionary sector so that we're reducing the risk to names like Amazon and Tesla. And the S&P 500, we're moving into the equal weight. And so there's two parts to that. One is we're trying to reduce concentration risk. And I think most investors are aware of the fact that these indexes have gotten heavy weighted to, overvalued technology stocks. And then secondarily, as a theme, is that then it's obviously overweighting names that have been beaten up through the pandemic, and so those are more value oriented and just what we would call recovery stocks. So that's the theme there in the equal weighted products.
And lastly, what about fixed income portfolio with yields rising?
Yeah, so with yields rising, we're and spreads also are contracting at the same time. So you've got this dynamic where in corporate bonds, yes, rates are going up, but at the same time with spreads contracting and at historically tight levels, it's an overvalued market as well. So we're being cautious there. We are shortening duration in some portfolios, and then also we're moving up in quality. So that if things dislocate, we see credit markets begin to unwind a little bit as leverage is picked up. we can move down the risk curve if we see, just more favorable spreads.
All right. Thanks, Adam. Appreciate it.
Thank you.
Our thanks to Adam Coons of Winthrop Capital Management. I'm Fred Katayama in New York. This is Reuters.